All right, so it's Friday, March 6th. The big jobs report dropped this morning, and, well, the market barely blinked. Today, we're going to break down why the most important economic number of the month was pretty much a total non event. So, why the big shrug, right? Well, it's because the market was caught in this massive tug of war. Over on this side, you've got the fresh jobs data. But pulling way harder against it was all this growing geopolitical risk heading into the weekend. And look, in a fight between data and fear of the unknown wins almost every single time. The NQ ultimately closed the day parked right here at 25,087. Now, with that Iran conflict escalating, the big institutional players, they just slammed on the brakes. They weren't making any big bets, no aggressive buying, no heavy selling. They were simply sitting on their hands, just waiting to see what the weekend headlines were going to bring. Okay, let's take a look at the NQ battlefield. You can forget all the other noise, because only two lines really matter today. Up here in gold, we have what we call the ceiling at 25,250. And holding things up down below, we've got the floor at 24,990. And this is the crucial point. The market is completely trapped, just consolidating inside this super tight range. So seriously, grab a pen, open up your charts, and mark these levels down. 25,250 on the top, 24,990 on the bottom. This is where the entire fight is happening right now. Now let's pan over and check in on the neighbors. The 10-year yield, it crept up to 4.17%. Crude oil is pushing $85 a barrel. And the VIX, the market's fear gauge, is staying up there, above 20. When all three of these are pointing up, it puts real pressure on tech valuations, which, is what the NQ is all about. When the market gets all choppy and trapped like this, it is so tempting to get frustrated and just start gambling on a direction. But the pros don't guess. They follow a repeatable system, especially when things are this uncertain. And here's the core of that system, which is exactly how Ron Rose teaches risk management. It's a simple checklist for every single trade. First, a clear entry, so you know exactly why you're getting in. Second, a protective stop, because your number one job is to protect your capital. And third, a profit target, so you have a clear plan to get out. So how did this system apply to today's action? Well, it might surprise you, but the smartest, highest probability trade today was no trade at all. With so much headline risk looming, the absolute best move was to protect your capital, go flat before the close, and completely sidestep the danger of a weekend news gap. Sometimes the best offense is just a really good defense. And here's a pro tip for you for next week. When the daily chart is stuck in a range like this, don't try to predict the breakout. Instead, you're going to drill down to a smaller time frame, like the 15-minute chart. Wait for the price to prove it wants to move, get that confirmation, and then you act. This idea of having a solid plan isn't just for one type of trader either. It doesn't matter if you're just starting out, maybe you're managing a small account, or you could be an experienced pro just looking for an edge. A personalized plan is what gives you a fighting chance in a tricky market like this one. And if you're looking for help building that personalized plan, that's exactly what the one-on-one coaching at CIY Capital is all about. It's designed to create a trading system that fits your goals and your life, so you're actually prepared for whatever the market throws at you. To see exactly how the coaching program works and what it could do for your trading, just head on over to CIYcapital.com. And that's our recap for today. Remember, this is for educational purposes only, not financial advice. For the next daily breakdown, you can follow @Ron Rose Trading on Instagram or visit the website. We'll see you tomorrow.